As of 11:12 a.m. Eastern Time, November 12, 2025, shares of Creative Media and Community Trust Corp., ticker CMCT, are trading at $7.825. That is a staggering move, up $2.81 or just over 56% on the day. Now, if you just glanced at that ticker on your Fidelity mobile app or saw it trending on the Robinhood app, you'd assume this was just another chaotic, low-float microcap stock exploding for no reason. The expectation for a company like CMCT, which has been struggling deeply in the beaten-down office real estate sector, was, frankly, oblivion. This was a stock that did a 1-for-25 reverse split back in April just to keep its head above water on the Nasdaq, a classic sign of a company in distress. Yesterday, it closed at $5.01. With a public float of only around 740,000 shares, its entire market capitalization was sitting at roughly $3.7 million. That's not just small, it's microscopic. The market had priced this company for failure. That was the expectation. But the reality, what we learned at 7 a.m. this morning, completely shattered that narrative. The company announced it is selling its entire lending division, First Western SBLC, to an affiliate of Peachtree Group. The gross purchase price is around $44 million. But here is the critical number. After paying off debt associated with that division and other expenses, CMCT expects to receive net cash proceeds of approximately $31 million. Let's be perfectly clear about what this means. This is not a complex financial engineering story. This is simple, brutal math. A company valued by the entire public market at $3.7 million yesterday just announced it is receiving $31 million in cash. That is more than 8 times its entire market capitalization, delivered in a single transaction. The 56% surge you are seeing right now isn't speculative froth. It is the market violently, desperately, and instantly trying to correct its own massive pricing error. The stock gapped up at the open to $9.25, hit a high of $9.73, and has since pulled back to the $7.82 level, which, fascinatingly, still values the company's equity well below the cash it's about to receive. What we are witnessing is a complete and total reset of this company's balance sheet, and the market is struggling to figure out what the rest of the business, the actual real estate, is worth now that it's no longer attached to a failing narrative and will be bolstered by a massive cash infusion. The trading action today is pure chaos, driven by this fundamental disconnect. The volume is astronomical. As of this moment, just under 40 million shares have been traded. Again, the float is only 740,000 shares. This means the entire public float of the company has turned over more than 50 times in the first 2 hours of trading. This is an investment. This is a feeding frenzy. High-frequency traders using sophisticated interactive brokers trading platforms are battling with retail speculators piling in through SoFi Invest and Robinhood stock trading, all trying to capture a piece of this arbitrage. This is not the slow, steady compounding you look for with Fidelity mutual funds or Fidelity ETFs. This is not a set-it-and-forget-it intelligent portfolio. This is the raw, unfiltered mechanism of price discovery, and it is messy. The volatility is extreme because the market is realizing the emperor actually has clothes. In this case, $31 million in cash. This announcement also clarifies the company's future strategy. The expectation was that CMCT was chained to the creative office space, a sector that has been decimated by remote work trends. Its own filings from earlier this year showed its same-store office portfolio occupancy had dropped to just 70.2%, a year-over-year decline of over 1,200 basis points. The reality is that this sale funds a strategic escape. The press release was explicit. The proceeds will be used to support its priorities to grow its multifamily portfolio, strengthen the balance sheet, and improve liquidity. This is a definitive signal that CMCT is trying to get out of the office business and into the multifamily apartment business, a sector with much stronger fundamentals. This asset sale gives them the capital to actually attempt that transition. It's a second lease on life. Coinciding with this, the CFO, Barry Berlin, is resigning to join the buyer, and a new CFO, Brandon Hill, is stepping in. This is a clean break. So what exactly is Creative Media and Community Trust? It's a real estate investment trust, or REIT, based in Dallas. Historically, its portfolio consisted of these creative office properties in markets like Los Angeles and Austin, alongside a hotel and, crucially, the SBA 7A lending platform that it just sold. The company has been in survival mode. You don't enact a 1-for-25 reverse stock split, as they did in April, if things are going well. You do it to avoid being delisted. Just last month, in October, shareholders approved another set of reverse split proposals, giving the board options for a 1-for-4, 1-for-7, or 1-for-10 split, likely because the post-split price was still failing. The financial performance has been grim, with consistent net losses and declining earnings. When you're managing your individual brokerage account, this is the kind of stock, a micro-cap REIT with negative earnings in a bad sector, that most models would tell you to avoid entirely. It's not Nvidia stock hitting new highs on AI or Apple stock printing cash. It was a distressed asset. But today changed everything. The $31 million in cash provides a hard floor on the company's value that simply did not exist 24 hours ago. This brings us to the future outlook, and the tension is incredibly high. The first major catalyst is just 2 days away. The company is scheduled to report its third quarter 2025 earnings this Friday, November 14th. This will be, without question, the most important conference call in the company's recent history. The new management team will have to answer one question. What is the exact plan for the $31 million? How will they deploy it into the multifamily sector? How quickly can they stop the bleeding from the legacy office portfolio? This is where traders looking for investment help need to pay close attention. The narrative from that call will determine if today's spike is just the beginning or if this $7 to $9 range is the new normal. The risk, of course, remains significant. This is not a stock for a Fidelity IRAs account or for someone relying on Fidelity Wealth Management or Schwab Intelligent portfolios for stable growth. The remaining office assets are still a problem. Can the company sell them off? At what price? Or will they be a permanent drain on the new cash? Furthermore, the extreme volatility and tiny float make this stock exceptionally dangerous for self-investing. A single large seller could crush the price, and a new wave of buyers could send it soaring again. This is a far cry from the relative stability of Tesla stock, which moves on production numbers, not on its entire cash position being reset overnight. This kind of online investing is speculative, plain and simple. I'm curious what everyone watching this thinks about this move. Do you believe this cash infusion is enough to turn the ship around, or is this just a lifeline that delays the inevitable for their office portfolio? Comment below with whether you think CMCT will successfully transition into a multifamily REIT. In summary, the story of CMCT today is one of the most dramatic expectation versus reality resets we have seen in the REIT space this year. The market expected a continued fade to black for a struggling office landlord. The reality is that the company just unlocked $31 million in net cash, a figure that completely dwarfs its previous valuation. The resulting 56% surge and the turnover of the entire float 50 times is just the market trying to catch its breath. The future of the company is no longer about its past failures, it's about what it does next with this new, substantial war chest. The earnings call on Friday will be the next major inflection point for a stock that was, just yesterday, left for dead. Disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.